Thank you for watching. This is My name is Dan Whitmer. This is my week 3 PTR stock market analysis for, um, like I said, week 3. Um, I chose to do Netflix. Netflix stock right now is at 318. It's actually going down after a pretty good upswing. Some of the key factors and key initiatives of Netflix, where it's located, the worth and pay of some of their key executives. This is important because you can tell a lot about a company by who they have in the upper management. It's always going to play a factor if you can kind of see who's at the helm of the company. If a company's helm changes, it usually will cause a dip and actually be a negative mark on in the stock market, depending on the actual person. Sometimes a change up for somebody that's seen as a kind of a visionary can cause the market to actually see an uplift in it. Basically, who is Netflix? They are basically an internet TV. They start out with DVDs and sending them out by mail, and then they moved to streaming, and they are now a global company ranging at 190 countries with 117 million members. Pretty awesome. So Netflix has a snapshot just for stock reasons and purposes, just to kind of give a strength to the story. That as you can see, we kind of started down low and then kind of climbed up during the early 2017, and then going into 2018. As you can see, we kind of climbed up quite nicely here, and actually took a dip just a last little bit. So statistics on this, as you can see, the debt ratio and the book value of the company. The book value of the company is skyrocketing due to some expansions and a new push that they've kind of been pushing out as to compete with some of the competitors. Growth in the industry, you see sales revenues is shooting straight up. I mean, they've launched into India. They've opened up a couple of other markets, and trying to get that last push out to get further ahead in the market there. Their earnings, as you can see, had a nice little dip right here, but then skyrocketed back up. It's kind of like playing ping pong there. Some of the statistics looking at Netflix, the market, enterprise value, the actual cash flow, how much cash they're actually making as to how much cash they're actually pulling in, their actual dividends and statements. All these are kind of factors when you're looking at stocks to see if they're going up and down. And then looking at forecasting for the year, early in the year, as you can see, kind of got a straight, and for December, and next year you're going to see a little bit of an uptick, and then it's going to level out again. Quarterly earnings, and it's just going to go straight sixes on that for the months, the year to year there. And then as far as correlation analysis, some of the key points: growth, momentum, and earnings and growth. Kind of translated them before I actually ran my analysis. Do I see any evidence of well tracking? Yeah, but I think I might have been doing it a little bit wrong. I see that you can do a sort of form of that. I mean, I know Netflix does correlations analysis on all their viewers, and so I might have been working up the algorithm wrong. But as far as I could see, yes, it did. Where do I see supportive? Where do I see support, resistant levels? Please provide a chart in domestic on this. That's actually further up there. Recommended. My recommendation is to buy. I reading into the stocks and kind of seeing how everything's being ran. If it would be to buy, hold on to it for a couple more years. I see growth in 2019 and 2020, and then to sell at that point at a profit. Do I see it going? Do I see stock prices in the future going up? Where do I see them in about a month? I see kind of still an up climb, 322 in a year, 316, because we're going to have that end of the year dip. If you looked over the last 10 years, there's always that little dip at the end of the year, and then they skyrocket back up, which I showed in that chart a little bit earlier, and I'll show again. Please provide supporting data for my charts. Okay, so as I was saying, you see a nice little dip down here, and as we come up, you see how we're climbing. We're still going to continue to climb, but there's a little dip because there's a little dip there, there's a little dip there, and all it is like a little rebound on the market, bouncing back and up and down. And the income statement of the actual profits year to year, revenue versus net income. As you see, it had a nice big dip in 2015, but it has been continuously going up. This is all very important when looking at stocks. Cash flow, again, we're not looking. Operations is actually going down because a lot of things are being more automated. The financing of the company is on its way up, and the investing is slow but steady, which is a good thing for stocks because sometimes you want to see that bump, but you never want to see a drop or a decline. 5-year over highs and lows. As you can see, it's a constant up for all. When it opens at a high, lows are downs, and then closes. 5-year adjusted for the volume. As you can see, it almost looks like an EAG heartbeat. There's only one point that was kind of low below the open. That's in the 2015s, but as you see, 2017 had a little bit of dips there. You can kind of see it, the little blues poking through. But 2018 has been nothing but above the mark. So that's my analysis of it. Thank you for watching. Again, my name is Damon Whitmer.